Now, on the back of disappointing third-quarter GDP numbers, some hope has emerged on the growth front. Now, the HSBC India Manufacturing Purchasing Index, or PMI, rose to 54.2 for the month of February, indicating a revival in manufacturing, led by a rise in domestic demand. Now, Anirudh Ghosh joins us with more details on that. So, Anirudh, how significant are these numbers and what does this really imply?
Well, this really looks like it implies a gradual uptake in manufacturing, in the fact that, we've been seeing a gradual decline in the GDP numbers. We've seen the GDP numbers that came out yesterday come out well below what a lot of market people were expecting, and also well below what the trend should be, going by what the government is expecting and also what the RBI is expecting. Now, of course, these numbers are for February, remember. So clearly it does show that, there is some amount of uptake happening in the manufacturing space. A lot of raw material produce is happening, but on the other hand, we see that there is a lot of pressure being exerted by the raw material prices. There's a number of inflationary pressures coming in because of this, and also, of course, the fact remains that the demand pressures are still on the rise in the economy, and that, of course, could lead to further inflationary pressures in the economy. So clearly, all eyes will now shift on to what numbers come out from the IIP release in about a week's time, and of course, following that, in a couple of weeks' time, we'll have the RBI putting out its policy release on the 19th of March. So clearly, everything really now depends on what kind of a view the RBI takes. And also remember that the RBI has quoted this particular HSBC PMI index in the past as far as their policy formulation is concerned. So clearly, this gradual uptake in manufacturing growth will be something that they will take cognizance of. And also, of course, they have pointed out that a lower rate scenario from here on will help, coming down from here on.